Happy Monday, everyone. Welcome to The Street Live. I'm Jeff Mark, Senior Portfolio Analyst at Action Alerts Plus, standing live on the floor of the New York Stock Exchange with Jim Cramer. Jim, we got the market slower today. We had some disappointing economic growth numbers out of China, Delta variant. We'll talk about Afghanistan and what's going on there as well. What are you seeing today in the markets?
Two things. One is that the news events are just awful. The actual macro news, whether it be Delta, whether it be China slowing down. But money then goes to another area. It doesn't come out. So money goes to Procter. Now, this is something I want to write about for real money, because when I see this, what it says is there are people who don't want to miss it still. They just figure like, all right, give me something that does well in this environment. And I'm flabbergasted because you keep expecting a sell-off. Like I have a 401k, all right? And I like to, when the market's down, and this has been my case for 30 years, when the market's down 5%, that I commit capital. There's always down 5%. There's been no down 5% in 10 months. So I haven't committed any capital in my IRA or my 401k. And I'm sitting there thinking, do I really have to come in at this level, this age? I don't want to. But the longer this year goes on, when am I going to make my contribution? So, I think there are a lot of people looking for a decline. And maybe when you're all looking for a decline, you don't get a decline.
So there's been no 5% pullback in the S&P 500, as you talked about, but we have seen a lot of rotation action right underneath. And today, to your point, we're seeing money go back into the Proctors, as you mentioned. A lot of the slowdown stocks, AbbVie, Bristol Myers, I see they're higher today, Abbott Labs.
They have dividend, right? Interest rates are going down again. Many of these companies are doing quite well. Regeneron's doing quite well without the dividend. It's just Regeneron's on fire because they have the monoclonal antibody, and they're the ones, when you read about if you want to try to be a prophet of doom, when you read about all the hospitalizations, that you remember, they have monoclonal antibody, they were likely to get out of the hospital much quicker. When you have a Procter, there you're betting that the dollar might be weaker, probably not, that maybe the raw costs are done going up, maybe. I was with a lot of chemical CEOs recently. They haven't finished passing on price increases. Or you're betting on a slowdown. And the slowdown would be an international slowdown, because in our country, all that the Steve Leismans of the world, and Steve's very thorough, are talking about taper. And I think I'm not calling it tantrum. That's like silly. The question is, are they right about how Delta is affecting the economy? What I think is interesting is the NASDAQ's down much more because people want to get away from these high multiple stocks. They want lower multiple stocks. Now, why? I think some of it is just ennui. I look at the SPACs, all the companies that come public. I'll give you an example. Just kind of real life stuff here. All right, so here we got, this is the one good piece, Cowen, Cisco buy.
Yeah, and they report earnings this week.
Yeah, and then here's going into it. But then you start getting into some of these companies, they're like, I don't even know. I do. I looked at them all. But here's, that piece is good. Jeffries on Sonos, I thought that was a good piece. That was fine. American Eagle Alpha, we got to be careful there. We have to talk about that. I'm not sure about it. Ulta Beauty, that's expensive. I don't know if I want to do that. And then you get to these. Are you ready? Ryan Specialty Insurance, Wheels Up, CS Disco. By the way, that's for legal. That's not a throwback to the 70s. First Advantage. Kaltura sounds like a jeans company, but it's not. It develops and produces.
You have Contour Brands.
Right, Contour Brands. And I say to myself, all right, there are dozens of the ones I just read. 17 SPACs last week. I think we have too much stock. And by the way, there are just lockups expiring left and right. So on Mad Money, I want to start asking people before they even come in, I need to know, are you about to have a lockup expiration? Because there is so much stock coming to the market, and the market is not ready for it if it's high multiple. If it's low multiple, take it, but the low multiples aren't offering stock.
Yeah, and that's an interesting point you raised, because these aren't companies that are continuously buying back stock. They are relatively new companies. So some of the why the S&P 500 may be so resilient is because a lot of those large cap names, they're buying back their own stock.
They're there, and they're not subject to wild swings. I'll give you an example. Upstart, which is a company I like very much. I profiled it last week. That's artificial lending, UPST. It's up 350% for the year. I mentioned this one on Stop Trading. It's up $80 since they reported Thursday. So it was up another 10 this morning. It's coming down 10 now. Those are stocks. I want to contrast that with, say, Microsoft. Like Microsoft, if I buy it, maybe I lose 5. That's how I feel. And I could lose 10 if it's the market. Upstart, maybe I lose 30. So this is a market that I think is going to be less kind to Upstart and more kind to Microsoft. Now, we have one that unfortunately is not, I can't determine, MasterCard. And we'll talk about that on Action Alerts. But like that's one where it's like, is it a high multiple? Is it too low? And there are a bunch of stocks. I have a piece this morning on Real Money about what a company's worth and what a company can do. And these are, if you go to the Real Money piece, and I urge you to do it, you will see the process that I use to deal exactly with this kind of market.
We're going to talk about that Real Money piece a little bit later in the program, but before we do, we have to get back to the geopolitical events and what's happening in Afghanistan with the Taliban gaining control in the country. You talked about earlier how semis could be at risk, potentially, if you want to extrapolate out some of the geopolitical concerns.
Okay,
what do you think what's going on?
All right, so you're an ally of the United States, Taiwan semi. You know that there was a moment where the United States abandoned Afghanistan, but it wasn't this weekend. It was when you elected Biden, or even a tweet from Trump. When you elected Biden, Biden was very clear, we're getting out. What is very strange is that there were still so many Americans there. When everyone knew we were getting out, the foreign policy establishment didn't think it. Did they not see that the Taliban were paying off people? And I don't understand how they could have been so blind to it. Versus, there was a much better. I know it didn't look right, but there was a much better South Vietnam departure where they got multiple people out, 50,000 people out. Now, let's say you are on the board of Taiwan Semi. Well, you're thinking, China's got a car problem, not enough chips. The United States got a car problem, not enough chips. Well, I mean, do you sit there this weekend and you say, I'm going to continue to give all the chips that I can to the United States? Or do you say, you know what? I'm going to play on the safe side. The United States seems to abandon allies. If the United States abandoned allies, I got to switch my game plan. That's what I'm worried about when it comes to the idea that the Taiwanese have to be worried that we'll abandon them.
Yeah, the chip shortage, we will be, and some of the implications with Taiwan, we'll be monitoring that in the coming days and weeks. Now, Jim, you talked a little bit about the Fed before. We are hearing some more chatter from officials calling for an expedited end for the tapering. We have Neil Kashkari out today saying if we do see continued growth in the recovery in the labor market, we could start ending tapering sooner than expected. So, Jim, what do you think what's going on with the Fed here and with last week's PPI numbers?
Look, unemployment's strong. I mean, people are getting hired. PPI is too hot. Against that, the benefits are going to end. And now maybe we discover that so few people got vaccinated versus what we were hoping, that we have to close a lot of places. If that's the case, you can certainly taper your bond buys, but it has to be a taper that's slow, and it has to be continually talked about. Like every time we hear about it, that should make people say, no surprise, no surprise, no surprise, no surprise. Now, Janet Yellen famously in 2015 said there's no surprise if we raise rates. She raised rates and then things plummet. I think that if I were the Fed, I'd say, listen, we got a big Delta problem here. We got China. We got people coming off employment benefits. What's the hurry? Let's wait till October when we see what the economy looks like with all these people off benefits and the child tax credit spent. But that seems to be a very out of favor view, and all I can say is that my view is prudent, and I hope that the Fed's prudent.
All right, Jim, you mentioned some of the unlove for the high multiple stocks a little bit earlier. So let's talk about a high multiple auto name that is in the headlines this morning. Tesla, U.S. agency is probing its AUTOPILOT system and looking into some of the crashes that have occurred over the past couple years. How big of a headline risk is this to Tesla? You seemed to talk earlier this morning that the amount of crashes seem to be few, but it's still worth looking into.
Years. I mean, one of the things that I think is, like, let's say you're Waymo, and you went broad distribution, or you're Mobileye, broad distribution. It seems as if you have one accident, the whole project gets blown up. And what I don't like about that is when I saw the number of people over a 5-year period, the crashes seem like a small number. It's so small that if I were the company, I would say, listen. We'd like to say, tell everybody in multiple forms, including right on the dashboard, that this doesn't have the ability to do X. Tell us what you want us to say. Because to make it so that they pull it out would be a shame. I think that I keep thinking about the drunk people who, frankly, are going to drive no matter what, and I want to be protected from them. And therefore, I want the entire process to go by, look, you won't be safe if you do this, but you have to understand if they take it away without being totally involved, all they have to do is say, listen, you can use it, but please be aware that it's not foolproof. I mean, it's not like an autopilot in an airplane where it's like there are guys right there watching it. So I think they may come up with something, a nice compromise, which just says, look, if you're going to use this thing, you have to have hands-on. But I don't know. I know that didn't seem like a lot of crashes to me.
All right, Jim, I hate to go negative headline into after negative headline, but we are seeing T-Mobile, they're investigating claims of a hack of 100 million accounts. F confirmed, look, you've been a big believer in T-Mobile over Verizon and AT&T, and that's been the right trade for a long time. So what do you think about T-Mobile in light of this news?
I think that when they come out and say what it is, you may only have like 30 seconds to buy it because the company is just doing so well versus, say, Verizon, which is stuck in the 55 range, and AT&T stuck at 28. So people want a growth telco. That remains the growth telco. And maybe you buy some now and buy some a little bit lower.
All right, another company doing well, they reported last week, Disney, streaming numbers outperform expectations, 116 million subscribers, and those results, they definitely fared better compared to what we've heard from Roku and Netflix earlier this earnings season. So, Jim, when we're looking at the streaming landscape in general, do you have to evaluate each company on a case-by-case, streaming platform by streaming platform?
And I want to point out, in our talk, I said, listen, I wish we'd gotten back to Disney. Multiple times I mentioned Disney. Why? Because Disney's got that buy model that you want. At home, you get Black Widow. The theme parks open, you get that revenue. Delta hurts them in some ways, but they really kind of built this great infrastructure for Disney Plus and ESPN Plus, which I love. So, yes, it's case by case because there's so many of them. And people were buying Roku, then they got slapped. They were buying Netflix, they got slapped. But Disney has the alternative. They have, look at, if Delta breaks hard, then you're going to want Disney Plus. And if Delta clears, then you're going to want theme parks. So it's a win either way. And that's what I realized, the mistake that I made was that they have a model that wins either way.
Yeah, well, it has been coming in. It opened up pretty high Friday and went lower the rest of the day, and it is a little bit lower this morning. So that will be something to watch.
I think that if Disney comes down much more, maybe we'll pull the trigger. I like Cashier. I mean, we sold again this morning. We can talk about that in our video. We're not putting a lot of money to work, except for situations that benefit from Delta.
Exactly. And Jim, now we talked a little bit about your real money piece earlier. You're exploring what's in the stock, what is not necessarily out of the stock. You use NVIDIA as an example. Say it trades at 50 times earnings. It may not actually be 50 times because they tend to outperform earnings estimates by such a large result. So please give us some investor education here about how to determine what's in the stock, what might not be.
Well, what I like to say is you got to look at where what NVIDIA earned in previous years. And you'll realize that they earned so much more than you thought that it turned out to be an inexpensive stock. It turned out a lot of times it was selling at 17 times earnings, and yet we thought it was at 50 times earnings forward. Nucor, a lot of people are betting that steel crashes. And so therefore the 6 times earnings actually is expensive because their estimates can be cut in half. I think the outliers are what you look for, and an outlier is a Nucor with an infrastructure package. Now, we didn't even talk about this on my last show, but Nancy Pelosi seems to be holding up the infrastructure package by saying you have to agree with the other larger package. Now, I hope that there's some sort of reconciliation there. That's awful. Nucor's down badly because people now feel that the infrastructure once again is going to be pushed back. Nucor was flying when we knew that there was going to be a bill. I did say that I think that Nucor, the estimates are going to prove to be too low, especially for next year if we do get infrastructure. So I regard Nucor, even down 4, as decent.
Yeah, it was interesting because I think even when Nucor was trading around 100, we heard some chatter that the infrastructure package was already priced in, but as we saw, the stock did run to 120.
Let's talk about the Nucor for a second. Nucor went from tragedy to triumph for us, like Lilly did, where we just kept buying on the way down. Now, did we make enough on Lilly? You know what? Don't look at your wins. Look at your losses. Nucor, we bought it all the way down. Was it painful? We even got some at 89. Well, now you look back and you say, well, geez, I guess everybody could have gotten that. The answer is no. In Action Alerts, we actually own the mistakes, but then we deal with the mistakes. A lot of people don't understand that the notion of Action Alerts as a club is that we're in it together. When we make a mistake, we don't just say, oh, that was a mistake. We say, okay, now we're going to battle, or we say it's not worth battling. And sometimes you have to just run. Sometimes you have to just own. And sometimes you have to buy. And we go over and over again about which ones are right every time.
Yeah, and when you discuss the losses and what to do next, that's always a great part of the monthly calls that we do. Yeah. And I believe the August one is next week, so yes, that'll be something to look forward to as well. Now, Jim, we got a big week of earnings, retail, Walmart, Target, Lowe's, just to name a couple. Now, last week we were talking a little bit about Walmart and that recent rise we've really been seeing in the stock. And we were a little cautioned that how there might be a risk of elevated expectations into the print because all of a sudden everyone loves Walmart now. So, but let's look in general. What do you think about retail this week?
Walmart is bothering me because we did say that there would come a time when we didn't want to sell Walmart, 137.8. People were really very worried about the position. I think people felt that we were just dead wrong. And then we said, no, one day you could wake up, this thing could be at 250. Whatever. At 150. Now here it is, 150. But I didn't want it to go to 150 ahead of the earnings. But, we have a lot of stocks. I was looking at Paychex this morning. And, that ran into the earnings, and then it ran another 15 points. Upstart ran into the earnings, and it ran again. The stocks that have run the earnings and gone down are few and far between, actually. So my typical worry has not been justified. I wish that Walmart were not strong, but what this has meant, and I'm not recommending on this, but what's happened is that when they run into the earnings tend to be fabulous. Now, I'm not saying they leak it. I'm not saying that there's any issues there, but Walmart seems to be the stock everybody wants to own.
Yep, and as we talked about earlier in the show, that return into some of these slowdown dividend-paying names is definitely working into their favor.
Market, okay.
Not a high multiple SaaS market.
Not a good RX multiple. Not a when you see a SaaS company for K through 12, it's like, are you kidding me? Do you mind? There's a lot of companies that to me are unfathomable today. And then typically when rates are down, you want to buy those stocks. But I think that what's happened is there's an aversion to high multiple because people feel like we want a little safety. Things seem nutty, go for safety. I think this is a seem nutty trade. I don't think it's a slowdown trade. It's a seem nut. It's too nutty.
All right, we're going to leave it right there and go into our Action Alerts Plus video right after this. That's your show for today. I'm Jeff Marks. We'll see you tomorrow.